All right, if you're an investor, there's a good chance Sprouts Farmers Market, ticker SFM, has been lighting up your screen. I mean, the stock has been on an absolute tear. But what's really going on behind that incredible run? It's a story of a massive business turnaround. So today we're going to dig into the investment case for Sprouts. We'll look at the good, the bad, the bull, the bear, and exactly what you need to keep your eyes on.
And this really gets us to the million-dollar question for anyone looking at this stock. The performance has been, well, just incredible. The stock is hitting new highs, but is it too late? Is that crazy high price actually justified? Are you buying in at the absolute peak, or is there still runway left for this grocer to grow? Let's jump into the numbers and see what's really happening.
Okay, so first things first, we have to get a handle on what Sprouts actually is and who they're trying to sell to. Because, let me tell you, their entire game plan, their whole strategy, is built on the idea of not being for everyone. And in the grocery business, which is just a brutal, cutthroat industry, that kind of focus, well, that's their secret weapon.
You know what's really fascinating? It's who they decided not to sell to. Before 2020, Sprouts was all about deep discounts, chasing after the coupon clippers. But then, they made this incredibly bold pivot. They decided to go after a totally different kind of person, the attribute-driven shopper. Now, this is someone who's reading the labels, right? They're looking for organic, gluten-free, whatever it is. They're usually a bit higher income, and they'll go out of their way for the right products. This was a huge, game-changing move to get out of that race to the bottom on price.
And look at this sales mix just says it all. It screams farmer's market. A whopping 58% of everything they sell is fresh stuff, produce, meat, you name it. For a regular grocery store, that number is way, way lower. So you get the picture, right? This isn't where you go to load up on paper towels and laundry detergent. It's a destination for fresh, healthy food. And that focus is absolutely central to how they make their money.
So, okay, they changed the strategy. The big question is, did it work? We've talked about the pivot, but now let's really look at the before and after. Because honestly, the results from this new recipe for growth are just staggering.
Here's the key takeaway. They switched from playing a volume game to a margin game. The old Sprouts, all about promotions and these huge expensive stores. The new Sprouts is way more disciplined. They're all about curated, unique products for a customer who spends more, and they're doing it in smaller, way more efficient stores that just crank out better returns. And boom, here are the numbers, plain as day. The second they flip the switch on this new strategy, you can just see it in the data. Look at that gross margin just climbing up. That's pure profit right there. And even better, look at the earnings per share, the number that we investors care about most. It nearly tripled in just 5 years. That is the kind of turnaround that makes Wall Street sit up and pay attention.
Okay, so with that turnaround as our backdrop, let's talk about the bull case. What's the argument for buying this stock? Why are so many investors so pumped up about Sprouts? Well, it's a really powerful story, and it's all built on performance metrics that are just impossible to ignore.
Really, the whole bullish argument for SFM comes down to three main things. We're talking incredible sales momentum, industry-leading profits, and how they're aggressively giving back to shareholders. Let's break down the actual numbers for each one, because this is where things get really, really interesting.
First up, sales momentum. Look, in the retail world, there's a metric called comparable store sales, or comps, and it's basically the health report card for a store. And a 7.6% growth rate? That is absolutely fantastic. It means their existing stores are crushing it. More people are walking in the door and they're spending more money when they do. This isn't just about building new locations. This is real, deep, organic growth.
Second, let's talk about that profitability. A gross margin over 38%. I mean, that is practically unheard of in the grocery business. It's a knife fight out there for pennies. This number is a direct result of them sticking to their guns on pricing and pushing their own high-margin private label stuff, the Sprouts brand.
And number 3, they're literally handing cash back to shareholders. $1 billion share buyback. You know what that is? That's management screaming from the rooftops that they think their own stock is a bargain. And for us investors, it's great news. They're taking shares off the market, which makes every share that's left more valuable and gives a nice boost to earnings per share.
Okay, now let's step back and look at the whole picture. Just look at these trends since 2019. Net sales, up. Comp sales, not just up, but accelerating. Gross margin, expanding. And earnings per share, just exploding higher. This is a business that is firing on all cylinders. This table, right here, this is the story the bulls are betting on.
But okay, let's pump the brakes. No investment is a sure thing, right? And the bear case, the argument against Sprouts,
it isn't really about their execution. Everyone agrees they've been doing a fantastic job. The risk is all about the neighborhood they live in. It's a brutal, hyper-competitive industry. And let's be honest, they're one of the smaller kids on the block.
And this right here nails the core problem. Sprouts is caught in this strategic vice grip. On one side, you've got the premium threat, Whole Foods, with the basically infinite money and tech of Amazon behind it. On the other side, you've got the value threat, behemoths like Kroger and Walmart, who can use their massive size to create their own multi-billion-dollar organic brands that go head-to-head with Sprouts.
And listen to this. This quote from the analysis just hammers the point home. This intense pressure from both sides means that Sprouts' ability to execute flawlessly is not just a path to growth, but a requisite for long-term survival. Wow. Think about that. For Sprouts, being perfect isn't just how they grow, it's how they survive. They have almost zero room for error with these giants breathing down their neck.
And that brings us to what might be the single biggest risk for investors right now: the price tag, the valuation. This chart shows the price-to-earnings ratio, or PE, which is just a quick way to see how expensive a stock is. And you can see it clear as day. Investors are paying a huge premium for Sprouts, a PE of almost 22 times earnings. Compare that to its bigger, old-school rivals like Kroger and Albertsons, it's not even close.
So what does that high price tag mean? It means the market is already pricing in perfection. Wall Street is expecting them to keep up this crazy growth and keep those amazing margins. But if anything at all goes wrong, if growth slows down even a little, or if a price war starts and they have to cut prices, that stock could get hammered as that high valuation comes crashing back down to earth.
Okay, so let's recap. We've got a super strong bull case built on incredible execution, and we have a very serious bear case built on insane competition and a sky-high valuation. So as an investor, what do you watch? What are the key things that are going to tell us which side wins this tug-of-war? Well, I think it boils down to 3 deciding factors. Here is your checklist. Number 1, new store success. Their whole growth story depends on opening about 10% more stores every single year. You got to watch. Are they hitting that target? And even more critical, are those new stores making the kind of money they're supposed to? Number 2, defending those margins. Can they protect that amazing profitability when the big guys start slashing prices? Keep an eye out for any hint of a price war. And finally, number 3, the new loyalty program coming in 2025. This is their next big bet. Is it going to work? Will it actually get people in the door more often, spending more money? The answers to those 3 questions will pretty much write the next chapter for this stock.
And that brings us right back to where we started. Look, there is no doubt about it. Sprouts has cooked up a winning recipe for a very profitable niche. They're executing their plan almost perfectly. But the question you have to ask yourself as an investor is this: in a brutal grocery war against absolute giants, is all that good news already baked into the stock's super high price? Is this a truly healthy investment, or is it just a risky bet that everything has to keep going perfectly?